Nolan, good to see you. Today we are talking through 3 signs that you are invested too conservatively. We've talked before about the stress that comes with taking on too much risk, but playing it too safely can also create financial stress. So let's talk through those signs to determine if your retirement plan may be too cautious. Number one, you constantly worry about running out of money. If you are overly conservative, your savings may not grow enough to keep up with your needs, especially over a long retirement.
Thanks, Erin. Yeah, this is a great side of the coin to talk about because we often talk about the other one. So this first sign, constantly worrying about running out of money, a lot of times being overly conservative. These folks are the ones who, like a significant amount of their money is tied up in the bank or banking products over
Yeah.
time, and like the interest rates just relatively low on them. We see like posted inflation rates. So we see like what they say inflation is, and then what hits us on our bottom line is a little different. So oftentimes with those investors who are a little too conservative, thinking that maybe 3.5 or 4% might suit their needs, oftentimes their spending power does end up decreasing over time.
Mhm,
So
mhm.
that's maybe the first one to talk about.
And then number two, your money isn't working for you. If your portfolio barely moves over time and inflation that you mentioned is eating away at your purchasing power, your retirement income could be at risk.
Yeah, and this is when we get into maybe more the types of investing that you can get
Yeah.
into. So instead of just having banking products, this is when you're taking like a stock and bond approach, but maybe you've decided, hey, I'm going to be a very conservative investor, and 80% of my money is going to be in bonds and only 20% in stocks because I'm conservative. Well, that type of portfolio, at least over the past few years, has not moved very much. Inflation's starting to eat away at that purchasing power, kind of like what we talked about in option one, but you're actually taking some risk this time. And then your retirement assets, which the whole benefit of them is the compound interest, like earning
Mhm.
more interest than what you use so that you can earn more interest on that interest you keep. That benefit is washed away when you're not earning enough in the account. So becoming too conservative, very bond heavy, very cash heavy can be an issue over time.
Mhm. And then last, if you avoid making financial decisions out of fear, if you hesitate to adjust your investments, even when it might benefit you, it could mean that your fear of risk is holding you back.
Yeah, this is when you are just afraid, I guess, to jump in the deep end a little bit.
Yeah.
You're not adjusting your investments when the market has decreased in value, or if there are buying opportunities, maybe it's just timidness getting in. I would just say when in talking about investing and talking about buying into the market, buying into stocks, into bonds, having a plan and sticking to it helps alleviate some of this.
Yes.
So, making financial decisions out of fear, that doesn't happen too much if you have a plan for what your investments are meant to be
Right,
doing
right.
and you're able to withstand the risk that you're taking. So.
Right. So let's break it down for everybody then, Nolan. Explain how investing too conservatively can be just as dangerous as taking on too much risk.
Yeah, this is risk analysis. I mean, it's just important to know how conservative or how risky you can get, creating clear definitions for what your money is meant to do. So it's okay to be conservative. It's okay to have some money in this safety bucket, but identifying how much of it is appropriate. It's okay to have money in an income bucket, in dividend stocks, in bonds, in notes and annuities, but in appropriate amounts. And then you need growth assets. That's something that I feel like a lot of retirees just miss.
Mm,
You need growth assets. You need a portion of your account that you're okay with seeing go up and down a little bit more volatile over time, because that is the portion that's going to keep your spending power strong. It's going to keep you at a good rate of return over time instead of just depleting as the cost of living continues to get more expensive.
right. Have to combat inflation. Well said. So again, though, Nolan, it comes back to creating a plan built around your own unique risk tolerance, which I know is something you specialize in. So if somebody would like to sit down with you, make sure they're sleeping well at night with their money, what's the best way to reach you?
Well, they can call us, Erin, at 616-301-2581, or at our website, cornerstone-rp.com. There's a contact us box at the bottom of that homepage.
All right, Nolan, thank you.
Thanks, Erin.